Hello there. We're live. It's we could call this show better late than never, but just want to do a quick update. You're watching my live stream. It's called Be the Boss of Your Money. Typically, we come out at 4:30 Monday through Friday. Um, it is what it is. We've got a lot of responsibilities to take care of this week, like everybody else. I hope you find the time to watch this episode. We've got a couple of things to talk about. Title of today's show: Market. The stock market is looking. The stock market's looking a little bouncy all of a sudden. The Dow is down over 500 points, only to end the day down about 100. Okay, so not that we want the Dow to be down. This is a sixth day in a row for the Dow to be down, but it did bounce off its high. It bounced off its low. And some of the more speculative stocks, we'll go through them, recovered nicely. I'm not saying they went all the way back up. They had bounces. And some of these bounces could result from short squeezes, oversold conditions. But when I get into the speculative stuff, the junk that led us into this mess, I don't talk about this stuff with any feeling of glowing or optimism. It's just matter of fact, because I think a lot of people are playing with fire and they really don't know what the hell they're doing. I feel like the stock market right now, it's so erratic, and stocks all over the place investors are just flinging them up, down. I feel like people are just pushing buttons, just like randomly pushing buttons, just trying desperately to jump on a stock that could go up. Just let me just jump on this one that could go. Oh, I lost money. Let me jump on this one that could go up. And I feel like just investors they're all over the place. There's no rhyme or reason, and I feel like there's no strategy taking place. It's just pure speculation. People are just trying to jump from one bounce to the next, hoping to find something. Like they're going to trade their way up. They're going to trade 1,000 stocks up a couple of points until they get back to where they were, a year ago. I don't think they're going to do it, but we need to talk about that. We'll go through a quick update on the day, and that's what we're going to do. This is going to be a quick episode. It's a Thursday episode of Be the Boss of Your Money. Thank you so much for watching. While you're watching, if you have any questions about what we're talking about, certainly, and please hit me up in the comments. I love hearing from you. Your participation is what makes this so much fun. I love hearing from you. And also, if you don't mind, give it a thumbs up, a heart, applause, celebrate, whatever, depending on which platform you're watching from. We stream to YouTube, Facebook, LinkedIn, and Twitter. So I would love to see you out there. You're taking the time to watch. Thank you. You might as well give it a like, pound the button there, And now we're going to roll the intro. We've got a couple of things to get into, and I think this will be good to wrap up for the week. Here we go. Thank you for joining me. We're just getting started, a couple of minutes late today. It's just one of those weeks, guys. I've got plans tonight. I had planned something this morning. Met with someone over coffee today. Then I had a Zoom at 2. My days are so filled. Tomorrow, I just have a lunch with somebody, and that's it. I'm looking forward to getting in here and clearing like a pile of stuff off my desk. I was going to say a pile of something else that starts with an S. But whatever. Yeah. So let's just go over things real quick. The first thing I want to take a look at is the speculative stuff. Let me put you on the screen. Okay. Robinhood is rising after market trading, up 32%. Now, we just talked about the stock. It did hit a 52-week low today of $7.71, and it recovered a lot off its low. Keep in mind, the stock is down from 85. So don't go out there and say, oh, it's going all the way back up, because everybody's going to have an account with them. Robinhood shares popped more than 30% after Sam Bankman-Fried buys 76%. Let me show you what that's about. He is the CEO of FTX, a crypto exchange. He took a 7.6% stake in Robinhood. So that's why you're seeing the stock pop. It's not a particularly big company in Robinhood. It's not like it took 7.6% stake in, JP Morgan. Okay. But it's still, he's putting his money where his mouth is. This is somebody who either wants the client list or wants something from Robinhood. Maybe he sees value there, but it's always nice when somebody does see value in a beaten down stock. What to make of it? Now, this is a stock we spoke about, I think it was yesterday, the day before, about the new economy stocks, and Robinhood and Coinbase are the purveyors of the pandemic stocks, of crypto, of all things new and exciting, but unproven and, in my opinion, highly speculative. This is, let's take a look at Robinhood, and now we'll take a look at Coinbase, which was up. It was up 9% in the regular session. It's up 0.17% now. Robinhood was up 5% in the regular session. And now let's take a look at GameStop. GameStop was up 10% today. In the regular session, it's off $1. But from what I understand, it was up about 25-30%. I just did not take a look at it. I look at all these stocks throughout the day, but today was a day that I just had important things to do. I don't have any skin in the game for GameStop. I have no affinity for this. If you want to trade it, go ahead. But I'm just pointing out meme stocks and speculative stocks. So to me, like Robinhood, Coinbase, GameStop, and AMC are like the four horsemen of the pandemic stock world and speculation and new stuff, new trading things like that, new ways to trade, like capturing short squeezes. AMC Entertainment, AMC was up 8%. It's amazing how far these stocks have come down. All the diamond handlers became paper handlers. I don't know if you know what that means. The diamond hands means you hold forever, no matter what. Paper hands means you sell at the first chance you get, whether if you're scared or booking a profit or you just want to sell, whatever. No one's diamond handing these stocks. I look at the fundamentals. I don't really see fundamental reasons to be bullish on these companies. Forget the stocks. I'm talking about the companies. They've all come out with something in their recent earnings reports, their quarterly results reports that does not excite me, that actually worries me if I was in them. So these are not for me. I don't really get into it, except that I think they have a lot to do with the psychology of the market. And right now, these are the stocks that led the market down. And if the psychology changes, and now these are the stocks that could recover, they could help maybe turn the market around or be a sign that investors are ready for a turnaround. So let's talk about that. Is the market ready to turn around? The selling has been far and wide. I wouldn't say I know a lot of people describe the selling in the stock market like it's, indiscriminate selling. I don't know if it's so indiscriminate. I think a lot of the selling has been warranted. Stocks have gone up because interest rates went down. It makes stocks worth more on a discounted cash flow basis. And you saw stocks go to unimaginable, or to valuations that at one time were considered unimaginable. And I'm talking about, the Facebooks of the world, which Facebook is down almost about 50% from its high, Apple down over 20% from its high, Netflix down about 70% from its high, Microsoft and Alphabet down over 20% from their highs. Was it, still you've made a lot of money in these stocks. I don't think people have too much to complain about, except for maybe Netflix. And Meta, which is Facebook. So what's the best way to say this? These stocks are down so much from their highs, but they went up because they're screen stocks. They're part of the pandemic stocks. They're part of the stocks that helped us live and work and from home and stay at home. And maybe they were overdone. They were overcooked. So we had to let them come in a little bit. That happens. Doesn't make me panic. I met with a friend today who was somewhat he was not someone who's like panicking, you're ready to sell, just someone who's like just wanted a more of a clarification of why stocks are going down. What about inflation actually causes stocks to go down? And I think it's worth getting into what I said. What my answer was: how does inflation hurt stocks? How does inflation hurt stocks? Okay, so now we've got something to talk about. This is, I'm just so excited when I have something like this. I go on a riff. There are two ways that inflation can hurt stocks. First of all, inflation could cause a uh, a, a recession uh, by causing what's called demand destruction. So if prices go up for everything, consumers have to then decide what are they going to cut back on. Maybe they won't buy the new car. Maybe they'll take a driving vacation instead of a flying vacation, or they'll take a staycation instead of a driving vacation. Consumers will buy less things, less Starbucks runs, less Dunkin' Donuts runs. You see what I'm saying? People have to cut back because they have the same amount of money to spend. But if everything costs more, then they don't have enough money. So what are they going to cut back on? So it crushes demand for things like clothing, eating out, especially, the discretionary items. So that's one way that inflation could cause a recession because companies are selling less stuff, less services, and that could put companies out of business. We're already seeing job freezes. We're seeing some signs of layoffs. That could get a lot worse. That's what inflation, too much inflation does. A little bit of inflation is healthy and necessary in a functioning capital economy. But too much inflation is not a good thing, right? Too much of a good thing is not a good thing. The other way inflation hurts stocks is the Federal Reserve raises interest rates, and interest rates for long term securities go up. So, generally speaking, when there's inflation, short term, intermediate, and long term interest rates generally rise. If interest rates rise, that means the cost of money has gone up, meaning the interest rate that you pay on a loan. So think of it this way: the interest rate that you pay on a loan, let's say 5.5% on a 30-year mortgage, what's your cost of the money? 5.5%. You see, if you borrow money in a credit card and the interest is 21%, what's the cost of that money? 21% interest. Okay. That's the cost of money. Interest, when you pay interest, it's the cost of money. Now you know. So it makes life more expensive because so much of our society functions on leverage, on borrowing, on credit. Leverage, borrowing, credit, different words to describe the same thing. And it costs more money. Therefore, it lowers your standard of living because if it costs more money, your borrowing doesn't go as far or you have to borrow less. Okay. And the Fed raises interest rates, short term interest rates. But ultimately, companies with high PE ratios or no PE ratios, their future cash flow when interest rates are low is worth more in today's dollars. When interest rates go up, their future cash flow is worth less and the stocks get marked down. That's the discounted uh, cash value. Okay. So discounted future value. So that DCF, that's what happens, and stocks go down. Okay, so if we go into a recession from demand destruction, generally speaking, that's not good for stocks. If we have higher interest rates, generally speaking, that's not good for stocks either. Mildly higher interest rates because the economy is doing well, that's okay. But much higher interest rates, like what we've experienced in the last couple of months, no, stocks can't handle it. They go down. So that's how inflation, high inflation, hurts the stock market. So I just wanted to share that with you. I thought it was a good conversation and I thought it was worth sharing. I hope this makes sense to you and let me know what you think in the comments. I'd love to answer your questions. Let's just take a quick look at a few other things while I've got you. Well, hold on a second. There we go. let's take a look at the market. So the Dow down about 100, Nasdaq eked out a tiny gain, S&P down 5. These are not big moves. As far as I'm concerned, today was a pretty flat day, and we could use a flat day. Gold, though, went down quite a bit, 1820, down 33 the ounce. Gold just cannot catch a bid. I've been saying this for a long time. Gold might be indicating that the inflation that people are talking about might not last that long. Now, hold on a second. I'm not saying it's transitory, but I think people are starting to think inflation could last for, high inflation growth. I think people are thinking that the rate of inflation, the growth rate of inflation, could last a long time, a year, 2, 3 years. Maybe gold is telling us that, in a couple of months, it'll start to ebb a little bit. Oil was up a little bit. 10-year yield was down at 2.85%. It was recently over 3. So money going into bonds, not necessarily a flight to safety, because the stock market wasn't really down that much at the end of the day. So maybe it's a flight to bonds because investors think that they've seen the high in long-term interest rates for this current cycle, which would mean they see inflation heading down. The VIX is off a little bit, down 2.43%. So the VIX is telling you that there's not a major problem right now in the world. So let's just see who wants to say hello. False rally, Philly. False rally, Philly. Thank you, Philly, very much for jumping in here. Well, probably is. I think all rallies right now are subject. All rallies have to prove themselves because, the biggest rallies in the stock market are often, I'm talking like the biggest one-day rallies, biggest short-term rallies, they usually come during bear markets. And they fake you out. And then you buy them thinking, oh, here we are, we're back to the races, stocks are going up. And then the market goes even lower until you finally get crushed. Stop buying the dips. And then we could finally get ready for a legitimate rally that could stick around for a while. So for me, all rallies are subject. Now, if you're investing for the long term and you're putting your money into your 401k plan every month, don't worry about rally or not rally. You keep doing what you're doing. If you're trading or you want to get in and time your buys, things like that, then you want to pay attention to this stuff. By and large, most of us are not really darting in and out of the market. Okay, let's take a look at. No, it's not the screen. Crypto. This is a big thing. Okay. Tether. So we should take a look at Tether. This is Tether. Okay, this is the biggest, considered the I don't know, the heavyweight in stable coins. Now you have all kinds of cryptocurrencies, shitcoin, Litecoin, Bitcoin, all kinds of coins, right? Tether, the shitcoin is actually there's actually a crypto called shitcoin. Okay, so I'm not using dirty language. I'm just saying the name of a coin. Okay, compliance people? Huh? 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 All right. But stable coin, think of it like they're like the money markets of crypto. Like a money market is how much? $1 a share. A money market is pegged to the dollar, and the fund manager of the money market fund will own short-term securities, cash equivalents, uh, to reduce volatility as much as possible and to maintain the value of the money market fund, the dollar. Okay. And so stable coins are similar in that they are pegged to the value of the US dollar. Now, not Tether, the one that just plunged, Luna, went to almost zero. And UST is down to like 70 cents on the dollar. These are managed with algorithms, and presumably they have as their underlying asset a very speculative asset, which is Bitcoin. So when Bitcoin goes down, they could break the buck, go below $1 per coin value, And then it becomes believed that they have to start selling their Bitcoin, which makes other investors think, holy cow, Bitcoin's going to go down. I have to get out ahead of that, which makes more investors sell Bitcoin. So before you know it, Bitcoin tanks, which it just did, and everybody starts selling crypto, and people who had gains want to protect them. And now you have a severely bad market in crypto. Uh, so that was this one. Let me get out of this. All right. So back to crypto. So that's what's going on with crypto, and I just want to tell you where the cryptos are. All right, we'll go over the cryptos real quick. All right, so Bitcoin down to 28,000. That's the main one that we follow when we follow crypto, but it's 28,000. I think earlier in the day it was 26,000. So it's recovered nicely off its bottom. I wonder if I'm going to get the day low on this. No, I'm not. I think it was as low as like 26,000 or 27,000 today. So it really took it on the chin and bounced back. Bill Miller, famed hedge fund manager, says he sold some Bitcoin and margin calls, but remains crypto bull. There are a number of people who still remain very bullish on Bitcoin, and they've seen these quote unquote Bitcoin or crypto winters come and go, where the cryptos plunge in value, and then they kind of are reborn. New investors come in and take them to new heights. But for Bitcoin, I think the high was like 65 or $68,000 per Bitcoin. It is a very long way off of that. It's down by more than half from that level. Okay, and I think that's about it. So that's the big news. I'm wondering how much of this Bitcoin, of the crypto mess and the stablecoin mess, how much of that bled into the overall stock market, because I think a lot of people are investing in tech stocks, especially the more aggressive type of tech stocks, are probably the same people who are investing in crypto. So if one gets hit, it might have forced selling in another sector, which could cause margin calls, things like that. And that could actually cause these stocks to fall more. And then investors liquidate not just the speculative stuff, but what they can sell, like maybe higher quality stocks. And then it drags the whole market down. Things like Apple, Microsoft, etc. So that's my story. I'm sticking to it. I don't do these live streams on Fridays unless something crazy happens in the market, which has happened like every Friday the last couple of Fridays. Hopefully tomorrow will be a somewhat quiet day for us, because I do have a boatload of paperwork to catch up on tomorrow, and I really need the time. But if I have to be on the live stream, letting you know what's going on, I will definitely do that. Thanks again for watching. And if we don't speak tomorrow, have a great weekend.